Good afternoon and good morning to some. It's 11/17/2012, and what do we have here is a weekly chart on VeriSign. When VeriSign came out with its last quarterly earnings, it got slammed down to the 100-week moving average, and it had a relief rally right back up to my weekly this is the earnings weekly down bar. You came back up and you've got weekly tops right here, and I can tell you right now that the 50-week simple moving average is where it's sitting. The problem with this one here, it's not oversold. That's the problem. When we take a look at VeriSign, its earnings growth model and everything else that's involved, it's broke. This is the range. This is going to be the resistance level on this weekly level. It's at about 40.24%. It's not what we call 100% oversold, but we will tell you that there is a lot of downside in this name moving forward. If it hits a weekly sell signal, it's going to break the 100-week moving average. This is the earnings. This is the attempted relief rally to resistance. If you're buying calls to the upside, that is not the right trade. If you're looking at the put side of the trade, which is the right trade, because the 100 simple week moving average is at 37.28. The stock closed at 40.92 on a weekly level. Therefore, when the stock goes below the 50-week moving average and sells down, it will break below these points here. It's very simple that the lower end or the top and lower end of this weekly bar, here's the top of this narrow range week and the bottom of that one, this is going to be the key support level at 39.76. A break below it sends it to the 100-week moving average down here at around 37 pennies. Any move to resistance level should be sold short based on looking at the weekly. When I go to the daily, the stock on a daily area, there's the earnings gap down. There's the 200-day simple moving average. But let me tell you, we have mathematical formulas called daily simple moving averages or minute period moving average. It doesn't matter. What does matter is that this 20-day simple moving average keeps declining mathematically, meaning that it's going down in value. That means when you get rallies up, the reason why they're always going to roll over 100% of the time. There is no, you don't never have to doubt this one. Because when they go up, when you got declining 20-week, going down in value, when you go up, they're going to roll over no matter what. No matter what on this daily level right here. So, short-term support level right there. Here's one right here at 38.59. And the 10-day simple moving average is a 10-day simple moving average, and it's going below it. The wall, it recovered at the 200-day, and it's right back like it should. The only reason why it had the 4-day reversal was because at 20, this red line is declining in value. When it crosses over that 200-day, this red one, oh yeah, you'll break these lows. Well, does it have to happen in one day? No, but over a calendar of trading days, you're going to come down and break these lows because of it. The wall of resistance is going to be right here. Any move up here, just like it moved from here to here, any move back up or right below it is a short sell. When I take a look at VeriSign, VRSN, I go to a call and put strategy. I go to the December $40 put, which came up. You can see where the December $40 put, it's a regular, it's a monthly one. They've come up already from the bottom side up. This is where the top of this $40 put was. It was up here at 368. They don't move a lot because the stock is narrow range. If the stock goes up and hits resistance and the put options were to drop down here to around the $1.90 area, that's where I would look at buying these based on VeriSign having a wall of resistance. Now, if I want to trade a shorter time frame one, which they don't have, they're just going to have that monthly one, I can go over here now and take a look at this $35 put, which was on sale over here at 53 cents. They don't move a lot. They're a chop shop on the put and the call side, both. So, my recommendation is as follows, is to go to in the money, because you're going to get more of a bang out of the $40 put. And the $40 put, if it comes down in value during market hours based on what VeriSign is doing, this is where I would look for my entries. It can continue to run higher on the put side up to 333. We closed at the low of this put was 225. They don't have a lot of range. You're looking at an open of 225, you're looking at a high of 261 and a low of 225. You have to have at least 20 contracts to make any money. It's an illiquid option because of why. Here's why. VeriSign has a $1 freaking range intraday. That's your range. And $37 million negative money flow. What my recommendation is in this name is because of the range. When you only have a $1 range, you're not going to get much out of your calls and you're not going to get much out of your puts. This range on an intraday level must get at $3.50 and higher in order to move the beta in a call side or put side. What I will say is that VeriSign right now is going lower. Any move to resistance needs to be sold short. I will conclude the VeriSign trade. It's broke. It was deeply oversold down here and it came up. This is all a daily sell signal that it's in. So it's a great trade. Sometimes it's better just to short the name. You only got a $1 name. If you get 1,000 shares at resistances, you can make some money on VeriSign that way. My recommendation on the call and put side is that it doesn't have enough daily range to warrant either side of the position.